afternoon, everyone. Thank you for joining us on this beautiful Saturday afternoon while we're waiting for more weather to come into the Midwest. Let it snow, let it snow, let it snow. The person who told me they wanted a white Christmas, I hope we're getting enough snow for them. I know we're past Christmas, but anyway. This afternoon, we're going to focus on the advanced certification training. Even though we're using Practice Lab, our purpose for this training this afternoon is to talk about tax law and those pieces that advanced certified preparers will be doing at our site. Kyla has put together a very extensive scenario for us. I don't think I've seen a taxpayer coming in with all of these pieces, but they've come in with several of them. So we didn't want to jump around from scenario to scenario, so we put one together. So Kyla, thank you for doing that. Anna has put together the slide deck for us for the PowerPoint to kind of keep us on track and going through and putting in decision-making trees that we will use. As you'll see here in an upcoming slide, we will not be covering a lot of the basic income. We will be focusing on the advanced income, like Schedule Cs, side hustles, K1s, stocks and bonds. Sorry, I just had to save my hamburger there from the dog. Sorry about that pause. But anyway, so with that, I'm going to turn it over to my colleagues, Anna Mora, who comes from us out of Omaha, Nebraska, Kyla McGregor, who's coming from us from Gibbon, Nebraska. And so we are so excited to be here today. So Anna, take us or start us off.
Okay. So, if my thing works. So, this just kind of highlights what we'll be talking about today. So if you are curious into what we're gonna cover, this slide will show it to you. So we'll get started. So just briefly, a very overall summary. So today we'll be assisting Pam and Randall. They are married and wanting to file jointly. Pam worked for a company the first half of the year before starting her own business for the second half of the year, and subsequently that led to her insurance provider being changed. Randall is retired and receiver of those benefits. To help supplement his income, he took out some money from his pension. Unfortunately, Randall lost his mother during 2023, and because of this life event, he received an inheritance. The Anders want to itemize if possible, and they also have a few other things going on, and we'll gather that information as we review the intake form. So we'll go ahead and get started with our scenario. But I also wanted to point out that if this is your first time doing taxes, it can be a little overwhelming or a lot. And like I said in our previous training, that no matter how many years of experience you have, that first one is always just a little bit overwhelming. So just take a moment and then breathe. Remember that you have peers that are at your tax sites that can help you, and that you also have a site coordinator. If your site coordinator happens to not know an answer, they can reach out to us. And then we also have access to IRS agents, both on the federal and the state side, that can help us, in the state of Nebraska specifically. And then just one document at a time. If you get to a form, you don't know what it is, you can skip it and then enter another form you're more familiar with. So just one return at a time. I mean, one form at a time. And it is one return at a time. Okay, so then just kind of organizing documents. When you're in person, just make sure you keep out the IDs or item letters until after the quality review. A lot of people tend to want to put them away as soon as you enter them, but then you'll have to ask them to take them back out again later on. And then just kind of order your forms in the order of the 1040, or as you're entering them into TaxSlayer, following them down as they're ordered. That helps the quality reviewer go through it a little bit more easily. And then the last thing is if there's any calculation or notes that need to be documented, just go ahead and write them down so that when the quality reviewer comes over, they understand where numbers came from or where certain things that need to be noted. And then if you missed it at the very beginning, there is a slide that has how to access the practice lab. So if you need to, here it is. You can take a screenshot if you need to. So the other thing, before we start entering anything, I did want to point out that we've seen a little bit of an uptick with the IRS protection pin, identity protection pin. Some of the times that'll be issued as a result of a identity fraud or that they've been a victim of identity theft. Sometimes the taxpayer will sign up on their own, so they've requested to have one. So just make sure that on the intake and quality review sheet, you're looking at number 11 to see if they'd answered it and whether or not they said yes or no. And then so that you can enter the PIN into the return. And I'll show you guys where that goes once we get started. Okay, so we're gonna go ahead and open up our tax layer. That's not the one I wanted. We'll open up and log in. Okay, and then if you're not logged in, go ahead and do so. Remember, this is Train Pro Web. And then if you haven't created an account, go ahead and create an account. And then just sign in. We'll go into the practice area. Okay. And then in order to start the return, I usually, before I start looking at the scenarios or start looking at a few of their documents, I usually like to enter their information or at least just their social security so I can have it pulled up. So, I want to see which one. Okay, so we're going to enter Pam first. So we'll start the return. Okay, so then the first thing that we're going to do is figure out their filing status. They said they're married and they want to file jointly. Sorry, I had to sneeze. So, they said they will, thank you. They are married and they want to file jointly. So that's what they told us. But then if we look at our intake sheet as well, it says married. And if they happen to get married within the year 2023, they would have said yes or something like that, but we would look here. So I also wanted to show here is the decision making tree that if you're not sure, you can use to help you decide what filing status we would use. So in this case, we could start here. Were you married on the last day of the year? Yes. Did you and your spouse live apart at all in the last 6 months? They did not. So they're gonna do married filing jointly. So then we can click on this one for the most appropriate filing status.
And then like I mentioned earlier, or in the earlier session, if you weren't on the earlier session, do not click on filing status wizard. That'll put you down a rabbit hole that you don't want to go down. So always work through the decision tree yourself. And if you need help, ask your site coordinator. but just pick the filing status and don't do the wizard.
So then we can continue. So now we can enter some of the basic information. Usually as I'm entering some of this information, I'm kind of talking with the client, trying to get a little bit more information. Sometimes when you're doing this, they just give you all the forms, or they have a little bit of questions right to start off. So let's go ahead and start entering their basic info.
I have a quick question, Anna.
Yes.
Does it matter when people file jointly, whose name you put first? I mean, if they usually file together, does it matter if they usually, will it make any difference to the IRS?
It does make a difference, Linda, to the IRS. You want to be consistent because they're always going to compare, and they're comparing based off of the first Social Security number or ITIN number.
So generally do what they did the year before.
Mhm.
But
Okay,
if it's the first year that they're filing jointly, it doesn't really matter. Generally, you do the one that has more income,
okay,
or if one's working and one's not, do the one with income.
Mhm.
But yeah, if it's the first year, it doesn't really matter. But if they filed before, try to consistently do it the same as you had in the past.
okay.
And I may ask Jim, does that affect how the state looks at the state of Nebraska return?
I think it probably makes it one day easier. At Nebraska, if we get a return, if it's like it was last year, then we just can use last year's record and update it. If they would switch the order, we have to add a new record in with that as the primary and the Social Security and that as the state. And that just takes like an overnight. We do overnight processing, so we would send it, and we do it also in if a new record comes in, we would add a new record in, and there has to be like a overnight stage where we create a record for that. But so it doesn't worry, it doesn't cause them not to get accepted. It just might be a day later on their refund or something, or a cycle. I mean, we don't process on weekends or things too. But so it's best to keep it in the same as last year if possible.
Wonderful. Thank you, Jim. Linda, great question. Thank you.
So then we'll finish putting in their basic information. If it lets me. And then their occupation. This would be, or if any of these were to apply, it's kind of right here on this section of the intake sheet. So if any of those apply, then you would add them here or click on them. If they wanted to do any of these other things, it's on the last page of the intake sheet. And then for Randall, we'll put the information here below.
Anna, is there any way on your screen to make our tiles smaller so we can see a larger, we can see what you're doing at a larger font size? I don't know if that's
I
possible or not.
can make it bigger.
And while you're doing that, a chat came in, a wonderful chat. So, you know, we prefer, the IRS prefers everything to be in caps. It's much easier to read than if you do uppercase, lowercase. So if you can, please just remember to put that caps key on, because it will help us on the transmitting end, and especially when we're trying to review things and to check for accuracy. But great question, thank you.
Did we want it? Is this better to read?
I think so, but
It works for me.
Yep.
Okay.
thank you, Anna. Didn't mean to throw you off your schedule.
No, it's okay. So then, again, if Randall would have been blind or deceased, we would. No, this is we're back at pump. So Randall, we didn't finish putting his social security number, so we'll put that in. His date of birth. And then Randall is retired, so this is where we would find that. And then their address, they have a PO box. And they are in Lincoln. And then the state and city will populate. Phone number. The phone number is in case we need to contact them. And the email is also the same thing in case we need to contact them. Let's say it rejects because the information on there is incorrect. And we need to get a hold of them. So if they would like to provide an email, they can do so. So then we'll click. Yeah, go
I
ahead.
think you got the same birth date in for both. I think you put Pam's birth date and Randall's, unless I was
Oh,
dreaming.
no, I think you're right. No, I didn't.
Yeah. And it might make a difference on their refund, so Randall might want to have the right birthday. Sorry.
No, you're fine. It
No.
actually
Mhm.
does change things on theirs.
Yeah.
Yes, it does.
Yeah, 'cause-
So it makes him over
yeah, over 65.
65. Yep. Now that's a good thing. That's why we have multiple people look at everything, just to make sure that something like that doesn't happen.
Yeah.
And then we're gonna look at if they have any dependents that they listed. Just because they're a little bit older, I do want to say that sometimes you will have families come in where their oldest child is in school and they think that they can't claim them because they're in school full time. So even if it's blank, just ask them if they have a college age student living with them or going to school full time or part time. But in their case, there is nothing to put as dependents. But if they were and you weren't sure, you can find these in the publication 4012 to kind of help you with, like this one would help you with head of household. And then this one would help you figure out if they're a dependent or other qualifying relative, or if they're a qualifying child or dependent.
Right, and I think, Anna, just to follow up what you're talking about with the
Yes.
college age student might be grandchildren. That maybe they are eligible to claim them, but they don't think so.
Mhm.
So just asking them, that was a great suggestion.
Yep.
So then here we can just say that they don't have any dependents, and then we'll continue. Okay, so I think for them, we're gonna take a look at the income part of the intake form, and then also we'll be looking at what they handed to us, because sometimes they don't match or they don't know exactly what the form is, so they may not have marked it. So the first thing, always check for a W-2. Odds are they have one. Every once in a while they won't. So let's go ahead and get the W-2 entered. When it comes to filing a joint return, you do have to specify whose W-2 it is. So this one is Pam's, so you'll select Pam. If this is a corrected W-2 or a substitute W-2 or a railroad W-2, you have to select those. So let's go ahead and put in the employer ID. And then if the employer ID number has been entered before the information populates. So if it's not a new employer in our system, you don't have to worry about the entries. Just make sure everything looks good. Again, this will self-populate. So if it doesn't match what's on the W-2, just go ahead and update it because you want it to match. And then now we'll enter what's on W-2. Let me go over here so that I make sure. So here we want to keep an eye out. The W is HSA contribution. So we'll want to keep an eye out because this makes it an advanced return. So I'll just zoom in on here. And then this will populate on its own. So just double check to make sure that the numbers that are here match these ones here. Sometimes like you see here, it'll be in cents, but it's okay if it's rounded up because the IRS will round up or down depending on the cents. So we'll just enter the withholding. There's nothing on the other boxes. For 12A, we have this. And then we have, I should probably switch them. We have 1,000 and then we have there's that. We have this box that's marked. There's no other. We do have Nebraska. So then we'll put in the employer ID. And then the withholdings here. There is nothing else. So we can click continue and continue. And then we can move on to the next piece. So they let us know that they had interest. So we'll enter it in this one here. We'll click begin. And then we'll click on the interest income form. We'll click continue. Payer. So this one, Edward Jones is who has it. If I can spell.
And then Edward Jones is a broker, so more than likely it'll be like a full brokerage statement that'll have 1099 interest, dividends, and 1099-B all in one document that's probably somewhere between 5 and 20 pages long. So each of these will look a little bit different depending, and it also kind of depends on what company it is. They'll look slightly different from each other. So just keep that in mind that if you get a statement from a company like Edward Jones, just make sure you double check to make sure that you go through and check to see if there's interest, dividends, and a 1099-B within that.
Yes. So then we'll see if there's anything. So anything with the asterisk has to be filled out. So the rest we can leave empty. Here you have to see who's it's under. Some will have both the taxpayers' names. So there is a joint option, but in this case, it's only Pam's. So we'll select Pam. And then she only had $50 in interest, which is good. So then everything else is empty. So there's nothing for us to worry about. So we'll just keep going. Let me go back a little. So we need to make sure that we double check. I think that's on the 1099 dividends. Is it on here? That's on the dividend statement. Never mind. We'll come back to that one. But if there's foreign taxes paid here, make sure you enter that. If there's no state, we continue. So here, since I know, no, I don't enter another interest. So we'll continue. We'll add a dividend statement from here. We'll click continue. And now we can enter this dividend. And so this is what I was saying, that we need to keep an eye out for these. Because sometimes they won't have anything, but sometimes they will. In our case, it does. So we'll go ahead and put Edward Jones again. We can leave these boxes empty. And then we'll check to see if it's still for Pam. It is, so we can leave Pam. And then we can start pulling it out. So we have $100 in ordinary dividends. We have 100 in qualified dividends. We have 200 here. And then we have section 199A here for 10. And then we have foreign tax paid, which is 12. So then nothing else is filled out. So we leave everything else empty. And we'll click continue.
All right, so Miss Anna, let's take just a short break to make sure it is at the same place, because I believe next you're going into capital gains and losses. Is that correct?
Yes.
So with interest and dividends, that's all. Can you go back to your income page, Anna?
This one?
Mhm. So when we're done with the W-2, when we hit continue, it will bring us back to this income page. And then we'll look at our next form. And in this case, Pamela had an interest statement, a 1099 INT, and she also had a 1099 DIV, a dividend. And so those are all located in the third income item on the income page under Schedule B. Forms 1099 interest, dividend, and OID.
Sorry to bother. This is recorded, yes, and we will be able to find the recording somewhere so we could like come back and follow along again later.
Yes.
All right,
Yes.
I'll just worry about, I'll find the recording later to fill in my blanks.
Nope, that's okay, Anthony. What we've done is we filled out the W-2. And then, yeah.
I haven't even
Wait.
made it that far.
Oh, okay. All right. But I
I'll watch
know
later. I'll just do my best to follow along.
no, and that's fine. I think sometimes though on this income page that we are so comfortable with where the documents reside in it that sometimes we quickly move from segment to segment, and I think it's easy to get lost in that when you're doing it for the first couple of times.
Yes.
So Anna, I'll turn it back over to you.
Okay, so then, so we finished entering the dividend statement here. So we'll continue. And then the next thing on our list here is our capital gains and losses, which is in the Schedule D. Then we'll click begin. So we all have this one here where it says stocks, mutual funds, cryptocurrency, all of that. We'll click here. And so this is the form that we see to fill this out. So this one belongs to Pam. And the description of the property is right here, this 1A. So it's 100 shares of Tesla. And then it's going to ask us to enter the date acquired. Let me switch over to the other one so you can see it a little better. So the date acquired, which is 1/20. And then it's going to ask us for the date sold.
Every once in a while. So Anna, if you click on alternative option under date acquired. Under the
Okay.
acquired one. Occasionally there's like within the shares sold, there's like multiple days that they short sell things. So you can put various if there's multiple under the same, like Tesla, if they sold multiple times during the year, you could put various short-term, various long-term. And on most brokerage statements, it'll specify if the section is for short-term or long-term.
Mhm.
So that is potential that you could do instead of entering in each little transaction for each stock. Now we do have to enter each stock separately generally, unless there's a whole bunch. And then we can categorize them as either short-term or long-term. And then there's a box that we'd have to check further down. But on this one, it's just a singles transaction, so we'll enter it in as it says.
Yeah, so then we'll enter, what did I move over here? One click space, and then we'll enter the date acquired.
Anna, can I interrupt you?
Yeah, go ahead.
The description of property, I think it's 50 shares of Apple.
Oh, this is the other one. I moved down on the one. Here we go. So this is one, the one we were looking at. So then this date is 10/12/2015. And then we're going to enter the date sold, 10/31/2023. And then it says if it's a short sale, we would click here, which this one is a long term, so we would leave it there. Sales price goes here. And then here we would have to select if it was reported to the IRS or if it was not. Here it says that the basis was reported. So we would do this one. And then we would put the cost here. And then that is it for this one. So we'll click and we'll save and enter another because we still have to put this one in. This one's for 50 shares of Apple. So then we'll enter 50 shares of Apple, not of Apple, but of Apple. And then the acquired date, 1/20/2023. If we'll go ahead and enter the date and then we'll look at the box if we have to click in. So if it's a short sale, we click here. And then we enter the sale price. And then the basis is reported, so we'll just do this one. And then the cost is 800.
This would be rare, but occasionally if the cost doesn't happen to be showing up, on the form that you get. You need to have them contact whoever they had do their stuff to get that calculated, or they need to go to a paid preparer to get their return done. And then there's no adjustments, but occasionally we will have wash sales. So it'll either say wash sale somewhere, or there'll be a code W somewhere. There'll just be a W with an adjustment amount. So occasionally we'll have those. That's generally the only adjustment that we see at our sites that we would do. And then under this adjustment list, there is a code W towards the bottom. Right, yep, wash sale, yep, we would check that if we had that. And then if as I mentioned earlier, if we're reporting multiple transaction in one thing, we do have to mark, there's a spot a little further up, Anna, where it says multiple transactions are reported here. So we do have to do that. So if there's generally, let's try to, unless there's a lot, try to enter in each one separately. But if there's a whole bunch, you can categorize them. But then we need to figure out how to send the IRS the brokerage statement.
So I had clicked it, but make sure you don't click any of these. These should all be empty. So then we'll continue.
Oh,
I forgot to select Pam. Or I probably did and it just didn't.
that's one nice thing about this software is the things that are required. If you don't put them in, it'll yell at you and not let you move on.
And then this will show here, just kind of summarize everything for you. And then we'll see what else they have. This is just kind of telling you things that would need to be inputted. Where'd it go? And then now.
So then also in this scenario, every once in a while, we'll see somebody who, so you're only allowed to take losses up to $3,000. And if your loss is higher than that, that amount gets rolled over to the next year, and you can take it off your gain on the next year's return. Or if your loss isn't 3,000 the next year, you can take the portion of that loss. And so we'll generally have to either see if they have a prior year return, or ask them if they know if they had any carryover loss for their stock sales from the year before. And then we'll have to enter that in. So in our scenario, they had $500 that got carried over from the prior year. So we'll need to enter that into our return as well. So the third one down, capital loss carryover, we'll enter the $500 in here. And I said that it was long-term, so this is separated into long-term and short-term, and if it's for Pam, Randall, or both. So since all of our statements have been for Pam, and it's long-term, so we're gonna do Pam, long-term, carryover for $500.
Yeah. And as you guys saw, I had to go back to look at it because I was like, I do remember seeing it in the scenario. But these are things that sometimes the taxpayer may not know 100%. So sometimes these are the little trickier questions that are sometimes hard to get information on. So then we've entered the carryover loss. And so now we have a 1099-R that we're going to enter. But the only thing on this one is that we want to take note is this taxable amount is not determined. So we're going to have to figure out what the taxable amount is by using the simplified method. So we're going to pull up our scenario again so that we can look at the 1099-R. Okay, So then here we'll click continue. 1099Rs are right here. It's the fourth line. We'll click begin. We'll click begin on this first one. If this is a substitute 1099R, then we would click the second one. Otherwise, we leave it alone. Again, we have to figure out whose 1099R this belongs to. It looks like it's Randall's. So we'll go ahead and click on Randall, and then we'll enter in the basic information for the 1099R. And so Principal Life popped up. Again, I'll take a look to make sure that the address matches what's on here. It does. So I'll go back up here, and then I'll start entering what I see here. So there's a gross distribution of 10,000. It will default in here an amount, so just go ahead and delete it for now, and then we'll come back to this part. We'll click here that it's not determined. There is distribution code 7, which is a normal distribution. And there's an amount in 9B for 15. So now that we have this entered, we want to see if there's any state. It's empty. So then we're going to come back up here, and this is where we're going to try to calculate a taxable amount using the simplified method. So this is where we would click here for options. And then we're going to use the simplified method worksheet. So we'll begin here. And this is just a little bit of information of what would be the qualifications for using this. So we'll continue. Okay, so we need to know what the cost, what the planned cost is at the start of the annuity. So let's also go back up here to the scenario. So that we can see if there's something up here that also tells us. Okay. Okay, so looking at our 1099R, the amount previously, the plan. Oh, where'd it go? Okay, so this amount here is what we're going to put here. And then now he started receiving these in June, I think is what it said. So he started receiving them in June of 2021. So enter June 30th of 2001. We have to figure out in both our joint annuities, so that we would click here. Since it's a joint survivor annuity, we have to figure out the age of them together. Let me see. Oops. I'm gonna pull up the publication 4012 because there's a worksheet on here that helps you with this piece. And I'll have it on the side too. So if you go to D46, it helps you figure out how to calculate these pieces of information. Let me make this a little bigger. So for the start date, it says, for a joint and or survivor annuity. Where is it? Here, for a joint and survivor annuity at the ages of both spouses on the start date. So this is the age of both Pam and Randall based on this year. So now we have to do some math. So 2021. I don't know. Minus 19.
Kyla, how did you calculate the years? What number did you come up with and how did you get that number?
So I did what Anna's doing. I took 2021 minus 1964 and 2021 minus 1958, and then I added them together. And the amount that I got is 120.
Oh, I did the wrong numbers. Okay, 120. So that's 120. And then the number of months paid in 2022. So if he started in 2021, it would be a full year. So it'd be 12. And then we are told that it's that Randall has previously recovered 5,000.
And this is probably the trickiest part to get them to tell you. And actually, Anna, for this one, it's 1,500. That 5,000 is for the railroad.
Oh, okay. I looked at the wrong one.
Yeah, this is the trickiest piece, because a lot of times they don't know how much they'd taken out in the previous years. If they had done a tax return, most of the time, the tax return from the prior year will show how much was recovered. So it's really nice if they can bring in the prior year if they don't know offhand how much they had recovered in the past. Because that'll make a difference on how much is taxable in the current year. And if it's something where they can't figure it out, we can't enter anything in, and more of it's going to be taxed in the current year as well. So it is beneficial if they can find how much they'd previously recovered.
But Kyla, another question related to the simplified method there on the joint survivorship and the age. Does it matter? It seems like most credits, it's the age at the end of the calendar year. But does it matter? Is it at the
Yes.
matter? And if so, how do you look at that?
Yes, it does matter. So like for instance, Pam's birthday is before June, but Randall's is after. So we'll need to calculate how old they were on June 30th. So actually, Anna, it's probably actually 119. Because
what I was
Randall would have
thinking.
been a year younger then.
Well, thank you,
At the end
Kyla.
of-
I just always know on the simplified method on the certification, I always get wrong because I do it at the end of the year.
Mhm.
And as far as the amount previously recovered, is that starting from June 30th, 2021 or
Yes.
okay, thanks.
So then we'll click continue. And now we have a taxable amount based on the simplified method. So then we can continue here. And then if this was due to a qualified disaster, this would be out of scope. So you would just select no. And then you continue. And then let's see what else they told us. Let's see. They have a 1099-R. Yeah. So the next thing on the list is the railroad benefits. The railroad benefits comes in, it's one form, but it has two separate pieces. It has the green and a blue. The green will be entered here on the as a 1099-R railroad. So we can go ahead and click on that. I'll pull up the scenario again. This one, we'll enter it as we see. Again, we have to select that it's Randall's, and then we'll enter this information, which is right here.
Yeah, sometimes, especially the 1099s and things from different government agency, sometimes it's hard to find where the federal ID number is because it's very small sometimes.
It might tell me it's too long. Okay. So if it tells you it's too long or it just stops typing, then just enter as much as you can. We'll enter the address. And then we'll double check to make sure the address is correct. It looks correct. So then they said there's 60,000 in employee contributions. And then gross paid here would be 9,000. And then box 9. We'll go ahead and delete this again. And then in box 9, we'll enter the 3,000. For this one, remember that we have to do the simplified method again. So to get this box, we'll click here for this option. So plan cost at annuity start.
It's
We
the
can-
employer contribution, so it's the
Employer-
60,000.
Okay.
Yeah, for the railroad, there is a really good chart in the 4012 on how to input the two different types of forms in the 4012 guide as well. And the simplified method is required for railroad retirement.
Yes. I was gonna pull it up so we could look at it really quick. Do you know what page it is?
Oh, not off the top of my head.
I think it's around here. Here it is. But these are for. Yeah, so it's here. It's starting page D56. Where you have the 10/40/12 guiding you how to do these entries. So if you need help, you can go look there. Here we're gonna go back to the top and look at our scenario so that we can get this again because I can't remember the date that was on there. I know it was June. Okay, June 30th. Of 2021. There was a joint survivor annuity. And we had calculated it 119. And it was 12 because it was the full year of 2022. And for the railroad, Yeah, the railroad, it was 5,000. That was already previously recovered. So then that is 60,000. Then so we'll do that. And then we'll click continue. And then we'll click continue. And then now there's a taxable amount being calculated. So then that's it for this part. So we'll click continue. And now we'll do the other part of the 1099R.
And just
So we'll,
pretend that that's blue.
yes, it is blue. So the blue one goes here, and so this is for Randall. So under Randall's, we'll enter what we see. So the first one where it says Social Security equivalent, that would be here, 10,000. And then if there's any income withheld would be here. There is none. They do have Medicare premiums, which is this amount here. So we'll enter it here. And then that is it for this one. And then let's go check to see.
So people who are on railroad retirement, they don't get a separate social security statement. They get it
Yes.
in this combo with their railroad retirement. So that's why there's two parts to it. Because it's reporting their pension from their railroad and their social security benefit that they got for when they retired. So that's why that's why you have to enter in two different spots, and that's why there's two sections to it.
Yes. And now we're gonna.
I have a
Yes.
question, Hannah.
Yeah.
Where did you find the cost for the railroad pension?
Let me open it up again.
Oh, and Anna, I did figure out that it's, well, we'll answer her question, then I'll mention something else.
This amount here is right here. It's the employee contribution amount found on the green form.
Oh, okay.
It's never asked like it is asked on TaxSlayer. So, because, either there on railroad retirement and it's in box 3, it's employees contribution. I forget what it is, box 15
It's
on the 1090.
9B on a 1099R.
And what's it entitled? Is it employee contribution?
Yeah. Mhm.
Yeah.
It should say start
Mm-hmm.
cost.
It should.
Thank you, Anna.
Yep, you're welcome. And then I was gonna add something. I forgot what I was gonna add.
And then Anna, I did figure out this is a glitch in the practice lab. I don't think it'll be like this when we do it regularly, but click continue.
Okay.
But this is a continue again. But yeah, I found when I was doing it, that it was not flowing to the 1040 unless I checked, scrolled down, there's a checkbox some at the bottom. It wasn't flowing through unless I checked this box for it to be reported on 1H, which it doesn't always need to do that. And I don't think we'll have to in the real software, but there's a glitch and it kept telling me that I hadn't finished the input until I checked this box. So we're just gonna check it for now. I don't think we'll have to check it in real world situation. I think this is just a software glitch, but we'll just check it for now so that we can get it to go all the way through and at least show up on the return.
Okay. So then now that we clicked it, we'll continue. And continue. And then now we get to do one of the fun pieces, or the start of a fun piece. So we have a 1099 NEC. So we'll go ahead and start that. We'll go back to the income page. We'll start. Let me see what else is on here. 10K. This one? Oh, let's see. Okay. So we'll just start it. We'll click begin on the 1099 NEC. This one is for Pam. And then the payer is Anders Inc.
So she started her own business, so
Yeah.
she got a 1099 NEC for that.
Yes. And so we'll start here. And then click 4. And then we'll enter the IPN. Oh, here, delete it again. Okay. And then we'll get down to the income piece. And it looks like only the non-employee compensation is filled out. Rarely will you see their income tax withheld, but just in case there is, always double check. So then we'll continue. And so this, since the 1099 NEC is attached to the Schedule C, you have to select one or the other. So Schedule C is the correct one. If they happen to have it be related to farm income, this is out of scope for us. So we'll go into our Schedule C. So now we need to go back and look at our scenario. Oh, that's not what I wanted. At our scenario, because we need to figure out, for example, if they have like a business name, it would go here. If they have an employer ID number, they do not. Some individuals have a specific business code. If there's no specific business code and you go through here and there's not one that really kind of illustrates what the business in, you can use 99, all nines.
Yeah, I did for this. There is one that is for landscaping, so there is a specific business
Is
code that
there?
you could find for it, but
Let's see, we can search it.
there we go, landscaping services.
And then you can click on it and then it'll populate the description of the business. And we'll click continue. So now we've entered the Schedule C. If there's expenses and stuff like that, we'll make note of it here. So we'll start with car and truck expenses. I feel like that's always the easier one for me. So now we need to see if they had a car. What kind of car they had.
I just said SUV, I think.
Just an SUV. I'm like, okay, no.
One thing to note about car and truck expense, they have to decide if they want to do mileage or if they want to use all the expenses they use to take care of their car. They have to pick one or the other. They can't use both. So if they want to use how much gas, repairs on their car, all added together versus how much mileage would be, they can, but they have to pick one. Generally, mileage is better unless they have an exorbitant amount of repairs or something like that, but in general, mileage is better, but it's up to them.
And so then we have to put in the date you placed your vehicle for service. So that was July 1st, 2023. And then it's asking us for the business miles that they drove. So there was 3,000 commuting miles. We can put 3,000 here. Oops, I don't want to click that. And then
And just to note, this is a practice lab glitch as well.
That's what I was
This
gonna
year
ask.
the mileage rate is the same, so there'll only be one box for business miles. It won't be cut halfway through the year. But I do know if you do put it in the after, it does calculate it with the new rate, but
Okay. So for now, we'll put it on the after, because that's what I was literally looking at and thinking.
yeah, it should, this year it should just show one box for business miles, because the mileage is the same rate for the entire year this year. Last year it changed halfway through the year, so.
Nice. And then here we have to check if there is another vehicle available for use. They do have a second vehicle, so you would click here and then check if the vehicle was available for personal use. It was, we're told here. And these are questions that you can ask the taxpayer as you're completing. And then for the mileage, they should have documentation somewhere to know how many miles. And then if it's written, you would click here. So we'll continue on this one. We'll click continue.
Alice, so
Uh,
for purposes of the test,
Yeah.
we would have to split up the mileage, but for actual in front of the taxpayer, we do not. Is that what you said?
Yes.
Yes,
So yes, so you would just let them know that the 3,000 commuting miles are not calculating for
Correct.
the business miles.
but yeah, the business
Correct.
miles won't have two inputs. It'll just be one in the real
Yes.
world, but for the test purposes, it's still separated because it's still showing what it was last year.
Okay, that's what I want to know.
And when it comes down to deciding whether they want to use the mileage or the actual expense method, I mean, does it have to be consistent?
They can
Like
switch.
next,
either.
oh, they
They can
can
switch
switch?
it. Yeah,
Oh, okay.
yeah.
Okay, so then now we're gonna go enter the general expenses. So we do have 200 in advertising. If they happen to have several different, I guess like a very specific one, you could add here. Or if they had a couple different ones, I believe you can add them separately. Oh, but I'm just gonna go ahead and enter it here. Like Kyla said, when it comes to the repairs, they have to choose between repairs or mileage. And in our
Not
case,
specifically for the car. Like if it's repairs for something related to their business, they can take that.
Mhm.
So if it says like repairs or things like that, you need to specify if it's for their car that they're using for their business or if it's for repairing other equipment or things that they have that they use for their business.
Yes. And then in our scenario, do we know what repairs?
I was saying that it was repairs for their other types of equipment, not the car.
Okay, so then where do we want to put that?
There's one called repairs and maintenance underneath, right there.
Okay. So we'll put it here, and then supplies is right here, so we enter 200.
And sometimes we have clients that come in that have a 1099 NEC for the first time and they have no idea that these expense things exist. So sometimes you can go through this list with them and say, well, did you have to pay for any of these types of things to see if they can go back and figure out what expenses they have? If not, they'll just have to report the entire income from the 1099 NEC. And then just tell them for next year, make sure you keep track of these other expenses if they're going to continue on with that business. So that's one thing that you can do to help out the client too, is go through these different types of expenses and say, do you have these things, to help them reduce their amount of their income on their Schedule C.
Yes, and then the other thing I wanted to point out is the meals. So you can deduct a portion of a business meal expense, but you have to have business, it has to be like a business, business has to be conducted during the meal. And you can take 80%, but that's only if your business is like a trucking or some sort of like vehicle related business. So you would be able to take a little bit more. But otherwise it's 50%. And then
And I guess, Anna, if you want to click on income really quick, because every once in a while they'll have like, depending on how they run their business, they might have something, some other income related to it that's not on the 1099 NEC. So then you could go in here and type it under the gross receipts and sales. I didn't put one in here, but in our slides, I did put in a 1099K. On the next slide, because a 1099K, if they get one of those and it's related to their business, they would put it under gross receipts. There's not a separate entry for that. So it'd have to go directly on the Schedule C. And we probably will see a lot more of these because they changed the threshold of entities needing to report on 1099Ks this year down to $600 instead of, I think it was $15,000 before. So we might see a lot more of these. And I did want to know with the 1099K, you only need to, if the, well, some of the different companies that are sending them out are even like PayPal, Venmo, Cash App, DoorDash, Uber, which a lot of people use. If people don't get their stuff categorized in those apps, they might be getting 1099Ks and not realizing it. So we need to make sure that they need to report it and that it's not in error and it's not for just personal transactions of you paying money or reimbursing some friend or something like that. If it does seem to be an error, we'll need to have them try to contact the company to see if they can get it changed. If not, there is a way that we can put it in. So in the 4012 guide on D24 and 5, it gives an explanation on what you can do for that. But in a nutshell, what you would do is you would put the 1099K as other income, and then you would take it as an other adjustment to income to take it back out, saying that so that we're reporting it, but then we're backing it back out. And that's if it's for an error. If it's for business transactions, you would still put it on a Schedule C like you would a 1099 NEC. So if they get a 1099K, we'll need to ask them what the amount was for and if they think that it's correct. So that piece could get a little complicated, I'm sure, but we'll see. We'll work through it as the season goes on.
Yeah, we will. So then we'll move on to this one. We'll look at our slides. So we'll look at our slide for completing the Schedule C. And we'll click this qualified business income deduction would be the next thing is another slide. We'll click here.
So the qualified business income deduction should calculate automatically. You would only need to enter in extra information if there's if you think that there should be an adjustment to the amount of your income that's not calculated elsewhere, or this is out of scope for us, or if you paid people that work for you on a W-2. Or if it's a type of business that's considered a specified service business, then you would fill this part out. Otherwise, it should calculate it automatically.
Okay, so then we can move on, click continue, and then now we'll go back to our scenario to see what other forms they have. Let's see here. We entered this one, we entered that one. So it looks like the next form that they let us know they have is a 1099 cancellation. So then let's go. And this one, we'll just keep looking at it. So now that we will find under the other income, and we can see it listed here, cancellation of debt. So we'll click begin. And then there's a specific line for this one. So it's cancellation of debt from 1099-C. So we'll click begin. There's still a line for it, so we'll click here. And so we have to figure out if it's Pam's or Randall's, and it's Randall's. And then we need to put in the creditor's name. In this case, it's Chase. The federal ID number. And then the amount that was forgiven. So that's 10,000, or not 10, it's 1,000. So then once we enter it, we'll click continue. And then we'll click continue. Continue. And then there's nothing else for us to enter here for less common income.
The K
Then-
one.
Did we have a K1? Oh. So we do have a K1. Did I skip it? Oh, it's literally the next page. So then we'll
So
enter
for-
the K1.
Just to note, the 1099-C, we do need to double check to make sure that they're not bankrupt or insolvent. If they are, then we can't do their return because that makes it out of our scope. And then the only other type of cancellation other than generally credit card cancellation is if their house is foreclosed on, and that as far as what's in scope for us. Okay, sorry, Anne, I just wanted to note that.
No, that's fine. So then the K1, let's go back to our slide. So in our scenario, we know that the K1 is from a form 1041. And it's up here in the corner. So we'll click begin. And this one belongs to Randall's
it's random.
mom. So then we'll put the estate trust or name, which is Caroline. And then the EIN number. And the address. The zip code. Okay, so then we'll enter everything as we see it. So the first line is 500. The 2A is 1,000. 2B is 1,000. And 4A is 2,000. And then everything else is empty. Oops. So then we go down. We click continue. Continue.
And a couple notes on K1s. There are 3 different types. There's ones from partnerships, there's ones from S corps, and the one that we had was from an estate or a trust. They all slightly look similar, but they're slightly different. They're in scope for us as long as the only things that are on them are interest, dividends, capital gains, or royalties. If there's anything else, well, on foreign tax paid. If there's anything else other than those 5 things, it becomes out of scope for us. So those are some things to know. If you see K1s, double check to see what's on it before you start inputting it. And then in the 4012 D59 to D62, it shows a visual of each K1 and what lines are out of scope and what lines are in scope. So that's a good thing to look at. If you see a K1 and you're like, wait a minute, I don't remember if we can do this or not. It's good to go in there and double check.
Kyla, where do they report royalties? Is that that's on a K1, right?
It can be on a K1 or on a 1099 miscellaneous. Generally, it's on a K1 though.
Okay, so then now we can continue moving forward. And then with that entry of the K1, it's brought us into the adjustment to income. So now we're going to be on the health savings. So with the health savings, in our scenario, Pam has an actual form where she made distributions. But if I remember correctly, she also made a contribution
Anna.
on her yes, on her,
So since we're starting a new category, adjustments to income, do we want to take our break 15 minutes early? And then that way we come back and we'll do adjustments, deductions, and the
Yeah.
rest of that.
yeah, we could do that.
Does that sound okay with everyone? Okay, all right, so let's meet back here at 3:26. And Becky, I have a weird question for you. Where is home for you?
I'm sorry, what did you say?
Are you live in and around Hastings?
Yes, I live
Awesome.
in Hastings.
Wonderful, wonderful. So Kyla will be working with you at the Hastings Public Library.
Yes.
Oh, great.
We're
And
still working on nailing down the exact days and times, but we're getting there.
Wonderful. Yeah,
So-
it's a great place to work. Yeah.
wonderful. Now, do you go by Becky or Rebecca?
Either one is okay, but Becky,
Becky,
yeah,
okay.
Rebecca
Well-
is more my legal name. So-
Okay, well, I'm gonna put in our spreadsheet, I'm gonna put in Becky. Because,
Okay.
because I was trying to find you to give credit, for being here today. And so I was like, oh, duh, I bet it's Rebecca. So thank you so much. I'll let you take a break now.
Thanks, Linda.
You're welcome.
Is this a 15-minute break or 10-minute? Sorry,
I think it's a 10-minute. So
10-minute. Okay,
yeah, how about 2:38?
2:38. Sounds good.
Yes. All right,
All
thank
right.
you. So Anna, oh yeah, Anna took a break. Okay, I'm gonna take a break. I'll be back. So that's kind of cool then, Kyla, you're getting to meet one of your volunteers.
Yep.
Diana, I'm bad. I'm not even presenting, but I had to go get myself some sugar.
No, I went to go see if I could find my glasses. I found my old pair, but I really don't know what I did to my glasses.
I checked the bird cage.
I think they're actually in my car somewhere.
Oh, okay.
Because I'm like, I found every other pair that I've owned.
Ah, I get that. So are you feeling comfortable with the rest of the agenda then?
I think so. Yeah.
Oh.
Yeah, because this is, I think we got through the long section of the income.
Yes, because I think some of the other pieces are just going to be informational items.
Yes.
Linda, I haven't hassled you in quite some time. How are you?
I'm fine, how are you?
Well, I need some caffeine, but I'm doing well. Thank you for asking. I'm gonna go try to get snowed in or snowed out of eastern Nebraska again.
Oh, good idea.
Yeah. Got to embrace it, right?
Yes. I'm feeling kind of sad today because the dog who lived next door to us for 12 years had to be put to sleep yesterday.
Oh,
She was our grand dog and she was really, well, she thought she had two homes, because we took care of her when they went on vacations and stuff. And whenever she could get away, she'd run away and come see us. And I always told him, I'm tired of telling you your dog's at our house. If you're looking for your dog, just check with us first.
right. Just call or text.
Yeah, she was a sweet dog. So
Oh my gosh.
I feel very sad. I'll miss her.
Yes,
Mm-hmm.
it is, right? Those darn animals, they really find a place in our hearts, right?
Oh, yeah, they sure do. Yeah.
That's probably because they're so loyal and forgiving.
Yes. Yes. Unlike people, yes. Right.
Right? They
Well, that's
they tell you what they're thinking.
yeah.
They'll forgive what we're thinking and saying. And yeah, it's a great.
Well, how is your dog? Is your dog doing a little better now?
Well, I would like to say yes, but no, it's a process.
Yes.
It's a process. So she's such a good traveler, and she's really good on the road. Like if we have to take her out to, do the bodily functions type of thing. So she's really good. She'll ignore people, but if there's a barky dog, she gets a little reactive, and part of that's still built in with how timid she is. But we put up a wood fence, so now we don't have to worry about her jumping over, the 30-inch fence, to go after Tucker, her mortal enemy. And so she's liking it because she gets to spend more time outside.
Oh, good. Yeah.
But I don't know, her and the squirrel, they have something. So just a few minutes ago, she was barking for the squirrel to come in or to come out. Thank you for asking. She gets to about twice a month she gets to go play with her sister. And I think that's kind of cool because rarely do I think litter mates get to see each other after that 10 or 12 week time period. But it's interesting when they hear each other barking through the phone. I mean, it's kind of, or when her sister is getting reprimanded by my sister over the phone. Ears will go up and she'll have this look at me like, well, what did she do? I didn't hear her do anything, so.
Yeah, right.
So do you think your neighbor, too soon to tell if they want another puppy, or do they have another dog?
Well, on top of it, these people have been there for 12 years with their 5 children are moving on Monday.
Oh,
That's insult to injury because they were kind of my kids too. Now
Ah.
they're leaving, so it's sad. It's sad in our neighborhood right now because I'm going to miss them a lot.
Do you know, I have something for you, Linda, something for you. They're furry. They have 4 paws. They're these adorable 7-week-old kittens.
Oh
that
no,
are- That are
I'm
house
allergic.
trained. Oh, are you really? Oh,
I'm allergic, yes.
these are non-allergic cats. I'm just kidding. I'm just kidding.
Sorry.
No, they yes. They, well, there's in Brown County, which is north central Nebraska, there has, oops, I went over time here. Anyway, there's been an explosion of cats. And so we live 1.5 miles from town, so everybody's now dropping off their pregnant moms.
Oh, yeah,
And it's gotten out of control. But,
yeah.
anyway. Well, folks, hopefully I didn't make us go overtime tonight. I was having a great time chit-chatting with Linda. But I know Anna was getting some things lined up, it looked like. So what we're on for the rest of the afternoon, and if we need to, we'll take another break, because I know this is some pretty dense topics, but we're going to talk about adjustments to income, itemized deductions, and qualified business income deductions, and additional taxes, and then non-refundable and refundable credits that are within scope for the advanced certification. So we're still looking at being done by 4 o'clock. But as always, please let us know what questions or concerns you have as we work through this. I really appreciate everybody's comments so far and the attention to detail. I like it when Anna's doing those typos on purpose, so that she can see who the good quality reviewers are. Okay, I'm going to jump back in and be quiet and turn it over to Anna and Kyla.
Okay, so we were going to start the adjustments to income, and we were going to start looking at the health savings piece of the adjustment to income. So I was also going to look at the W-2. Sometimes the taxpayer will bring the health savings form, and it'll be what's on the W-2. So you have to ask them if it's the same one, if it's reporting the same thing, or if that was an additional payment outside of what was on the W-2. So here it has the W, so we have 1,000. So we do have to enter this into our return, if I can get the right page. Oh, and it kicked me out, which is okay. We just have to go back in. We'll sign in. You can exit out of all of this. And we'll go back. If this happens to you, you just go back to client search. Here, there's not that many, so I can just find Pam. Yep, we were doing Pam. And then you just click select and it open back up. If it happens to be a very extensive list, you can search the name as well. You can search the name or social security number. Okay, so we're back at here. So then we're going to go back into the federal section, into, it'll be deductions. and adjustments, I think. Yeah, it's under the adjustments, and here's the health savings accounts for the HSAs. So here we'll begin. The forms we saw were, I think, one for Pam, for sure. Yeah, so this one's Pam's. So we'll select Pam, and then if it's a family or a self only, it should tell us somewhere.
I think usually we have to ask the client if it's self-only or family plan.
I think it might be here sometimes.
Mm.
Um,
Well, I meant for it to be family, but
okay. So if you don't know or the form doesn't let us know, then you can always ask them, and then they should know whether it was not family or personal. So then here it says 5498 SA contributions, and then these are HSA contributions made for 2023, and then those can be made up until April 15th of 2024. Here we don't want to include anything that is on the W-2, so we're only going to enter this amount here, because that's what Pam contributed outside of her W-2. And so then number of months you were considered an eligible individual this tax year. So we were just going to put 12 because I don't think there's anything specific to that. And then the amount there's nothing there. If there's an adjustment to box 12 that needs to be made, that would be here, but we don't need to worry about it. And we don't have to worry about this one either. And then if there's a 1099 SA, I think there was, it's not it. Oh, here it is. We would put the amount that was distributed. Here we need to ask if the amount all went to, that was distributed, all went to qualifying like medical expenses. Because if it all did not go, then the portion that isn't, or if all of it isn't, for qualified medical expenses, then it's taxable. So, and I think in our scenario, it does tell us that the expenses were all for medical expenses. I just want to check. Yeah. Okay. So then we say that it was all used. And then if there's anything there, nothing here. Nothing else would apply. There's no adjustments. Yep, there's no adjustments. So we can leave that blank and continue. And then that is it for the health savings piece. What else do we need to put on here? The next thing that we would do is the IRA deduction. This is also the amount that was contributed outside additional to. So then we would go here. Let me go back. feel like I won't click. Under the same adjustments tab, we'll go under the traditional IRA contribution. Click again. And here it says enter the amount of IRA contributions made by Pam and the amount made by Randall. So it's just Pam. So we'll put 5,000. And then it says if checked above, select the non-working spouse. In this case, it would be Randall. Oh, sorry. This would be if there was contributions made to a non-working spouse. This is IRA. And then Pam is covered by an IRA. And that. Kata, do you know if we have to fill out the piece for Randall as well, or can we leave Randall
I
blank?
think we can leave him blank.
Okay. So, yes, we can continue.
Oh, guess not. Nope, we have to put something.
Um,
I mean, he is technically covered by a retirement plan because he has his railroad retirement. So I think we'd say yes, he's covered by a retirement plan.
okay. So he would be.
And a couple notes for IRA deduction, you can only take it if it's for a traditional IRA, not for a Roth or a SEP or a simple IRA. It's traditional only. Now, the contribution amount, it's 6,500 or 7,500 if you're over 50, but that's over all the IRAs that you have. So let's say you have a traditional and a Roth IRA, it's 65 between the two. But you can only take a deduction for the amount that goes in your traditional. So that's a couple things to keep in mind if people have IRAs, to ask them what kind they are and if they have more than one.
Okay. So then we'll see what else we have. The only two other things that would be under the adjustments to income would be the self-employment tax deduction and the self-employment health insurance deduction. For the self-employment tax deduction, it's calculated on the Schedule SC, so we don't really need to do anything other than know that it will be calculated. For the self-employment health insurance deduction, deduction for for payments of health insurance premiums that are not part of the employer's plan can be deducted on the Schedule C. Did we have any for this one?
No.
No? Okay. And then we'll move on into the deductions. So with the advanced certification, we are able to itemize. And if I remember correctly, at the beginning of our scenario, Pam and Randall were wanting to know if they could itemize, if that was something that they could do. You could do it one or two ways. You can kind of sort of quickly add up the different pieces that are eligible for itemizing. Or if you're not sure, you can always enter them into the system and then have TaxSlayer calculate it for you. And then after you enter them, you can go under the deductions right here.
I think the bottom under,
Is it the bottom?
yeah. Yeah, it says
Okay.
compare deductions.
It could let you know which one is better. I mean, by default, the TaxSlayer will let you know anyways, which one is best. So you can always go enter things in and then come look at this. If you don't remember where to click, you could always just go to the summary print page and then look at the line 12, which says the standard deduction or itemized deduction, and look to see if it looks like it's one of the standard deduction amounts. For that part. What else? I believe they did give us I think like a home mortgage statement. So we can kind of just look at that. I won't enter it, but I can show you where you go to enter itemized. So here's the home mortgage statement that they had. That can be found. If you go into the federal section, you go to the federal section, you go into the deductions, then you go into the itemized deductions, and then here you can start entering things accordingly. The mortgage interest goes here, and so you just use what you see here to enter it on the form. So then we can go on to our next slide. The qualified business income deduction. Did we cover that on the other slide?
Just briefly.
Okay. Do you want to cover?
Yeah, so the qualified business income deduction, it's a above the line deduction, so it's just below the standard deduction. And this gets automatically calculated when you put in your Schedule C, or sometimes not for our purposes, because the part of a K1 that it would calculate for is out of scope for us. But so for us, it would just be if we entered a Schedule C, would this calculate? And it's only if they have a gain from their Schedule C. If they have a loss, it won't calculate anything. And just brief overview, it's generally 20% of their Schedule C income is what they get to take as a deduction. And that gets calculated on Form 8995. And like I mentioned before, since we put our Schedule C in, it'll automatically calculate that for us, and it'll put that in. So if you put a Schedule C in and it's not calculating something, you might need to double check to see if there's anything that you missed entering, things like that. But yeah, so that's a general overview of that.
And I've got a question. I think last year at one of our tax sites, I encountered a person who was an election worker, and she got some kind of a form, I think, reporting the income. But then I think we were supposed to be able to deduct that. And I can't remember, since I don't remember anything, I don't remember how we got that out of the return, but we did. Do you know what that was? I mean, I think it was some sort of a special income deduction for that, or maybe Kyla knows.
Yeah, I think it's similar to the jury duty pay, where you can take a deduction off. I'm not 100% sure, which I should know because I was an election worker last year too, but I can't remember off the top of my head. But yeah, I think if you go under income and then other income, I think other not reported elsewhere, I believe.
Would it be here?
Because I know jury duty's in here, but I don't know.
Can you put a minus? Did we end up putting in a minus something somewhere?
We do that sometimes. We usually do it here. The other income reported, sometimes we'll put a subtraction, a minus sign for things.
Oh.
Well, I remember we didn't know at the site, I think this was at the AARP site, and they're pretty good there, and he had to call somebody because he couldn't remember where to put it either.
Mm-hmm.
Yeah, my assumption is that it would kind of be treated the same way that jury duty is. So it'd probably be the very similar steps. Okay. And then so then we are going into the additional taxes and early withdrawal penalties. So if we remember at the very beginning, Pam switched from a W-2 employee to self-employment. And so her insurance went from being it went from being from her employer to the marketplace. And so when we have insurance through the marketplace, we get the 1095A, and so we have to put that in the tax return, because if we don't, it'll reject, it'll let us know that they got health insurance through the marketplace. So let's go back to the scenario so I can pull this up on that's not what I wanted. So that we can see the form a little better. So when we get to this part, we'll come over here. Usually if you just keep going, continue, it'll get to a part where it asks you, actually, I'll get going through that instead of clicking on it. So we'll click continue. And then we'll continue. You can click continue. If there's any miscellaneous forms, they'll be here. So if there's an injured spouse, that'll be here. If they're married, filing separately for the allocations. If there's a refund that's claimed due to a deceased taxpayer, this form would be here that you'd fill out. If they're doing a W-7 application along with their return, it's in the miscellaneous forms. If you need an identification pin, you can do that through here. So then here it's asking us if we received the 1095A. We did, so we'll click yes. So these are the households members. And then it says, are you required to repay the advance premium tax credit? Generally, this is a no. And it lets you know what would be a no, but usually it's what would be a yes, but normally it's a no. Is your household below the poverty line? I believe they are a no. Because I think they paid too much. Okay, so then this one's gonna ask you if the amounts on the form are all the same. And then we have to enter them individually. Is this for this one? Do we need to can we say yes even if it's like part year?
No, it has to be for the entire year.
Okay, because I'm like, I don't know why my brain is not thinking. But yes, if there happens to be like 9 months, or even if it's the entire year, but there's a different number for part of the year, which I have seen, you have to enter all of them individually. Oh, I clicked on something. I accidentally clicked enter, so we'll just go back. We'll continue. continue.
Linda, while Anna is coming back in and putting this information in on the premium tax credit for 1095A piece of that, I did look this really quickly. So election worker pay under $2,000 is not to be taxed with FICA. So, and so therefore it's not a part of taxable income. Typically, it does need, if it's over, I think, $600, it does need to be reported on a W-2. And so I think it would just, yeah. So I need to think about what would be the right way of showing it. Especially if it's not to be taxed if it's under 2,000, if I understand the statute correctly. Tyler, do you know offhand if you were paid on a W-2?
I know I didn't get a W-2, but I also only got like $150. So
Okay,
it's one of those things where they just didn't report it at all.
correct. Okay.
Okay, if all the lines were entered the same, you're allowed to put in just the line 33, A, B, and C. And that would be if you click yes. So then we'll click continue. And so it's just gonna let us know that our return is complete. But we can add a state return here. So if any of the states were available that we did, we could do it, but we're just gonna go ahead and click cancel. There is one thing that I don't think I entered, and that is the identity protection PIN. And I do remember seeing that they had a PIN, and I think both of them had one. Yeah, they both had an identity protection PIN. So don't forget that if they have one, to ask. And if they say yes, then we have to include it. So let's go ahead and include Pam's. And then Randall's. And then if they lost their IP pin, you can click on this here, and then it'll take you to the IRS website, so then they can log into their online account if they have an account, or they can call the number, but the fastest way is if they can just go online and get it from there. So then we can click continue. If for whatever reason they really cannot locate their PIN number, it would have to be a paper return. So then I think that was everything that we had for this scenario. We did
Did
that.
you do the self-employment tax or withdrawal first time homeowner payment?
No, I think that was then what.
Yeah, we didn't talk about it yet.
Okay, so okay, yeah, no, we still have the self-employment tax and early withdrawal. Yeah, we still have a couple slides then. So then,
So I can do this part.
okay.
So self-employment tax, one thing that I've been trying to tell taxpayers recently is, because a lot of people are like, oh, why do I have to pay self-employment tax? This isn't fair. What do I have to do this for? Why do I have to pay all this extra? And one thing that I've been trying to tell them is, this is your way of putting into Social Security and Medicare. Since you aren't working for somebody else for them to pay it in for you, this is your way of doing that. So when they retire, if you have your own business, if you're paying the self-employment tax, you can have Social Security, Medicare that you can draw from. So this is how they get their Social Security and Medicare. So I've been trying to explain it to people that way, to try to kind of ease that that shock, especially with people who it's their first time doing it, self-employment return. The thing with self-employment tax is since they aren't working for somebody else, they have to pay both the employee and the employer portion. That's why it's so high. The total for both is 15.3%, which is fairly high. But like I said, it's both the employee and the employer portion. And when you complete a Schedule C, it'll automatically calculate this on Schedule SE. And so in our situation, for our taxpayer, they would have a Schedule SE come out since they did have a Schedule C that we reported on.
Yes, and that I can get to the summary. Is it still its own line, or did they put it into one of the schedules now?
It's on a schedule.
This
It's
one.
on the next one, I think. Yeah, right there on
Yeah,
the top.
right here.
Yeah, self-employment tax.
So that's where you'll see that. And then the next thing is early withdrawal.
We don't have this situation for our clients because they're over 59 and a half. But if we had a younger client that for whatever reason took money out of their retirement account, if it's not for a few exceptions, they'll get taxed an extra 10% for taking that money out. Generally they'll get a 1099-R because they took the money out. And if it doesn't have one of the exception codes, or if we don't put in a certain exception on this 5329, then it'll automatically calculate a 10% tax if it sees that they're under 59 and a half. When they withdraw the money, I think what they can do is they can say, I'm taking the money out for this, and there's a code on 1099-R that'll say early withdrawal with exception, and it won't calculate it if it has that code. But if it has a normal distribution code, we need to ask them, okay, why did you take this out? Because if they took it out for a medical or education or a couple of other like severe life events, we can fill out this 5329 to give them an exception. But if they don't, then they just have to take the 10%. If they don't qualify for any of the exceptions.
And Kyla, we have something in the advanced test, right? It talks about an early retirement distribution.
Yes.
And then this form 5329, we would fill that out to where the 10% penalty would be on the portion of the early withdrawal that was not protected by one of those codes, correct?
Yep. Yeah. So as you can see, Anna has this drop down box open right now. These are all the things that could be an exception for taking the money out early if they don't have the right coding on their 1099-R. The ones that we would mostly see would be death, medical, disability, or education. Yeah, pretty much if they pull it out for anything else, they just have to pay the tax.
Yes. And the next one.
And then the first time home buyer, hopefully we don't see too many of these anymore, because this was from 2008, and it was a 10-year payoff, so they should have paid it back by 2018. But there's 3 or 4 clients that we have come in that still haven't quite completely paid off the entire thing. So, we still have the question on the intake sheet because there is still a few people that haven't paid it all back. So we'll just need to double check the intake sheet and double check with them to see if they are still paying it back. And then we have to put the amount in that they paid back on the 5405 form. And like we have in here, it's in pub 4012 on what all you need to input for that. I know you need to input the amount that they paid in that year. I can't remember if you have to put in.
I think there's a calculator.
Yeah, I think you put in how much you have paid in prior
Yeah.
years and then
Mhm.
what your current payment is.
Yep.
All right. So that payment will be taken off of their from the refund if you have it on due.
Mhm.
And can you search these forms in tax layer? Like just search form 5405 or form 5329.
Yep.
Yes.
Yeah,
Yes,
Anna, do you
right
want to pull that up?
here. So like if we pull up, what was this one? 5405. Right here, if we click on the little hamburger, or if you have the full screen, here you could just click 5405. If you don't remember the form, you can type in like home buyer, and then all of the forms that have home buyer would also pop up, so then you can just kind of read through which ones.
Mhm.
So then you just go through it, and that's how you could pull up a form if you're not able to locate it.
And then in our scenario too, I think we probably missed a piece of information. I think they, like an energy efficient credit that they were eligible for maybe.
Yes, so we're gonna
And that's coming
go.
up.
Oh, my
Yes.
bad.
No,
Okay.
no, that's a great transition, right? From adjustments and deductions into credits.
Yes, so now we're moving into the credits, so the non-refundable and refundable credits that we'll see in the advanced scenarios, or that are basically advanced. I think they, in the scenario, they do have an energy credit, but I think I didn't see, maybe I missed
I
it.
put it in later. I think it's in here now. Unless this isn't the updated one. I updated it late last night.
Okay, so I might not have the updated one pulled up. Is it in the folder?
Yeah.
Okay, let me pull it up.
Lucila, do you remember what the energy credits was in the amount?
Yes, yes, it's $2,000 for energy efficient windows.
Okay.
Awesome. Thank you so much. Jim
welcome.
gave it the thumbs up, so we're on track.
Okay, I wrote that down. So we'll come back to that. So yeah, so with energy credits, you can take certain expenses for that. So we'll go into tax layer, and then we'll go into other taxes. No. Where is
I believe under deductions.
Yeah.
I jumped ahead of myself saying you were done with it.
Okay, so there we go. So we'll go under deductions, and then under deductions, there's the credits here. And then there should be one line that says residential energy credits. And then here, there's 3 different lines. So there's qualified energy efficiency improvement, residential energy property expenditures, and residential clean energy credit.
And actually, I think, Anna, if we look in the 4012, they've changed the names. I don't think they've updated them in practice lab.
Yeah, I don't think so.
So yeah, if we look at the 4012 and we look at the energy efficient page. So these names will not be like this, and I think there's only gonna be 2 categories instead of 3. I think it's G20.
220? Oh, it's
Yeah.
further at the top.
Yeah, so I think it'll say residential clean energy and energy efficient home improvement credit. It'll just be those 2. And we're only allowed to do the one that's energy efficient home improvement credit. The other one, the residential clean energy credit's out of scope. And the things that are under the energy efficient home, doors, windows, insulation, and those are generally capped. So like the doors is capped at 250, the windows are capped at 600. And then there's other credits, air conditioners, heaters, water heaters, furnaces, boilers, different things like that, you can take a higher amount for those. So I had to poke around to figure out which one it used to be in. So I think, let's see. It's under the one that's called residential energy.
So the second one,
Yeah, I think it's under this one. Oh, no, not this one.
no,
No.
first one.
Yes, this one. Yes, this one has the windows.
So then, for this one, we have to fill out, we have to check here if it was a qualified energy efficiency improvement that were installed in or on your main home, and yes, it's located in the US. And then click here if you are the original user of the qualified energy efficiency improvement, yes. And then click here if the components are reasonably expected to remain in use for at least 5 years, and if they're windows, I would assume so. And then check here if any of these improvements were related to construction of the main home. I would think so because they're windows, right? So it's considered construction.
Yeah.
Okay. And so then the address.
Or actually, no, it wouldn't be, because that's if you're building the home right
Okay.
then, we're replacing them, not building it in.
Okay. So scratch what I said. It is not construction. What is
And
the
then I don't remember, I think on the mortgage statement, I put the actual street address.
Okay.
I think I forgot to put it in the general information piece.
It's down here.
And box 8 address description. So on the main input, you generally put what your mailing address is, but for this, since it's for improvements on your home, you have to put in your actual home address.
And then here, since they were windows, we could put the 2000, and then it'll just calculate the maximum. So you could put the 2000, or we could just put the 600. Either or is correct. Click continue. We continue on. And that's the part for the credits for the energy piece. And
And then the only other non-refundable credit that's part of the advanced that we hadn't gone over in the basic is the foreign income tax credit. For this one, we generally only see it if it's part of your 1099 dividend interest or 1099-B. There'll be a box on there, like we had on our 1099 dividend. There is a box called foreign taxes paid. And you just have to enter it in on whatever form that it's on, and it'll automatically pull to the foreign tax credit form. The only time that we would do something extra in the foreign tax section under the credits would be if you'd have to be international certified though. So if you're just advanced certified, you wouldn't be able to do this. If somebody lived outside the United States and they paid taxes in that other country, they could report that here as well, but you have to be international certified to be able to do that. For us, just being advanced certified, we can report it as long as it's just on the dividends, interest, capital gains sheets. We can do the foreign tax credit. And like I mentioned, it'll automatically flow through to the form 1116.
And then I think the other part of with the premium tax credit being refundable.
Yeah, so the premium tax credit, so what people do to begin with is when they file for marketplace, they have to estimate how much their income is. And if their income is within a certain range, they get this premium tax credit where they get credit off their premiums ahead of time. If they over or underestimate, that's why we have to put this on the tax return, because we're reconciling that they estimated their income correctly when they applied for their health insurance in the first place. So if they pay too much premiums, they're going to get a refundable credit and they're going to get more premium back. So if their income ends up being lower than what they said initially, they'll get more premium back. So when we enter all this information in, it'll calculate that it's like, oh, you didn't get enough of your credit, so we'll give you more back, and it'll show up as a refundable credit. Whereas on the other side, if they underestimated their income, they shouldn't have got that much credit. They need to pay some of it back. So sometimes if they do it the other direction, they'll have to pay some of their credit back, and that'll show up as other taxes. And that'll get added to how much they have to owe. And then if they estimated about right, then it still gets reported on the I think it's 8962. That form will still get filled out, but it won't change your amount of your refund.
Okay. And then that was it for entries on our return. Did we want to go through all the way to the end?
Yeah, we still have a bit of time. I think we could at least look at the final and kind of
Okay.
walk through it like we did this morning.
Okay, so I'll just make this big. So we'll click continue.
So once all the information is in, it's time to do the quality review. And once the quality review is completed, then the return is printed off, and then you, as the tax preparer, will walk the taxpayer through their tax return. And so, Anna is going to go through the return with us as if we were the taxpayer. And then this is where you get to ask questions as a taxpayer.
Okay. So, we'll have different print sets available. So we'll have one that'll be just the main information page. So a lot of the times when the quality review is happening, the taxpayer will review their main information, which is this page. If they elected direct deposit, the account and routing information, if it's already been entered, will be on the main information page. But here you'll just have them double check their name, date of birth, address, phone number, all of that, make sure it's been entered correctly. If it isn't, then we make the changes and then we have them look at it again. So then the system will recreate all of the forms that we've entered. So if for whatever reason they don't have one, you can print one of these off for them, but it's there. This is the e-file page. I always take these out and wait till the end after I'm done explaining the return. So this is where we start with the 1040. So I always let them know this is the 1040 and not NR, the 1040 SR. And here's their name, their social security number, their address. If they get a letter from the IRS, this is where they'll be receiving correspondence. I remind them what their filing status is. So Pam and Rendell are both doing married filing jointly. And then here it lets them know that that the spouse was born before January 2nd, 1959. And so the very first line we'll see is the amount from the W-2. Here there's going to be anything that will increase their income. So we have other income here that is earned. So their final income amount is higher of that amount. And then we'll look at what is taxable interest, ordinary dividends. All of this is taxable. What part of their pensions and annuities taxable. And then if they have Social Security, the portion of Social Security that's taxable. That will then come into also what we have capital gains. The 1040 SR is a little bit different than the 1040 regular. It's split up a little bit different. I'm used to seeing the total income right here, so I was like, wait. So
And
then
the 1040 SR, it'll automatically switch it to an SR if one of them's over 65.
Yeah.
It's supposed to stand for senior residence or something to that effect.
So it still works the same. So then now it's going to give us if they have any capital gains, if there's any additional income on the from the Schedule 1, which then will get the total of their income. And then if there's any adjustments, these adjustments will help lower the income amount. So then that'll result in the adjusted gross income total. And then here is where we can see if they took the standard deduction or if they were able to itemize. They took the standard deduction. And then this is where the qualified business income deduction comes in. And so that will lead to an increase. And then they're gonna calculate the total taxable income, which is then used to calculate the tax. And then we're going to look to see if there's any changes to how much they're actually having to pay back. So their total tax here is larger, and this is what they have to pay back. And so then it's going to be, then we're going to look into the section to see if there's any withholdings. So did they have a W-2? Was there any withholdings? If they had a 1099, if they had any withholdings. And this will help reduce how much they owe for the total tax. For their scenario, they had an overpayment, so they'll still get a refund. If they didn't have enough withholdings, let's say their 1099s didn't have any, they would be having to make a payment.
We may have lost her.
I think we do, yeah.
Oh, no, she's back.
Oh, okay. I was like, it's paused. Okay, so I'll repeat that. I'll have them double check their routing and account number one more time. I'm just very like conscientious because I don't want it to be wrong because then it'll reject and it'll be a paper return that, I mean, not a paper check that'll be sent out. So it takes longer. And at this point, if they have a state return, I go over the state return. In our case, we don't have one. So then I just would go and pull up the e-file form and let them know that if by signing this, they are giving us consent to e-file on their behalf and that any of the information on the return is treated as a self-prepared return, so they're liable for the information. And if they happen to get a letter through the IRS, they are responsible for it, but they can come back to us for help.
If they've been nice.
Yes. And so then, yeah, that completes it.
Anna, thank you so much. What questions do we have? Or comments?
I'm just
So-
doing my best to absorb what I can.
And not all returns are this hard.
No.
No,
This is
this
on the upper end.
this would be like your semester final. Maybe it'd
That's-
be your college final for graduation.
Yep.
Uh, if you see one like this and it's not caught at the greeters table, get it to your site coordinator. I mean, Jack could do it, Linda could do it. Jim's a site coordinator, so you would want to tie him down with it.
Sure.
But I guess what I'm saying is that, you know, our greeters do a great job of catching as much as they can before they introduce them to the preparer. But if things start coming out during your interview and you're sitting there going, and you can't take a breath deep enough to calm yourself down because the documents just keep coming, then you need to call your site coordinator over and say, how do you suggest I start? and so then the site coordinator might go, we'll start with this, and then I'll come over and I'll help you with X, Y, and Z, even if you're at the advanced level.
The good thing about this is that it was very organized. All that stuff was at the top, but when the taxpayers come in, they're not always so organized. They don't necessarily know that they were supposed to write down medical expenses and things like that. So evidently Kyla and Anna are better taxpayers than our normal.
They need to be out educating our taxpayers. This is how you
Yep.
put your information together.
That's
Yeah.
right.
Some of them are pretty organized and they'll have stuff kind of separated in folders or envelopes or something like that. But there are other people, they just have a sack or something. They'll just start pulling stuff out and they'll be like, do you need this? Do you need this? Do you need this? And then, so it varies a lot. But
But
Yeah.
so what we wanted to do with the morning scenario and the afternoon scenario is to really try to cover as much tax law as we could in context. So it hopefully made a little bit of sense, knowing that we have probably 3 or 4 or 6 taxpayers stuff put together into one. And I know Kyla was excited to try to put scenarios together that, you know, talked about each one of the components we thought you might be faced with throughout tax filing season. Other questions, comments?
we do have
Kyla,
another.
that was pure torture. I have to go
Oh.
take a nap.
Oh, okay.
I'm well with you, Jack. So Jack, when you've been down in Hutch and then in Lincoln, have you seen a return like this?
That had just about everything in it. She should have thrown in some education credits too, and then that would have topped it off. Did you do that this morning, by the way?
Yes.
Education?
Yeah.
You know, it's the one thing we didn't talk about, now that I remember we wanted to do, was how you can
Do both.
do both, right? Where you can move the scholarship income around to get higher. So if the American Opportunity credits, that you're pulling in as much refund and as much payment as you can for the parents. But Jack, we're not going to do that this afternoon because I don't know about you, but I'm brain dead.
Right.
But that's the only thing we did not do today. But Anna, do you want to put in the YouTube channel?
Yeah.
Jack, if you're interested in that, we have discussed how to do that in one of our brown bag sessions. And so we do have the education benefits video and slide step is up on our YouTube channel. And Anna's going to share, oh, there's the screen. Anna, take it away. Where can they find all that? What we've done so far if they want to dive deeper into some of the credits.
Yeah, so if you guys want to find out more and it's one of the brown bags we've covered, you can always go to our YouTube channel. I actually have it pulled up already from this morning. And you can find it on our homepage, or if you go under the playlist, you can see all of them on the side here, and you can click on the one you would like to see. And then this will also be where we'll be uploading today's training. So if you are curious or want to go back through it, it's on our YouTube channel. And then